Well, just 19 days until the US election, and with very limited data coming from the US, bar the US retail sales numbers, which is coming up in the session ahead, the market's focus on the US and the trades around there does ramp up. Now, we are seeing a stronger US dollar. It is king at the moment across G10. We're also seeing US equity markets print their 46th all-time high for the year. We're certainly seeing gold not far away from it, although it is all-time highs in most G10 currencies. And we look at trades around Bitcoin and Ethereum as well. It's all going on. This is the trade-off. Well, hello, Chris Weston here from Pepperstone, and we're joined in 2 seconds by Blake Morrow from Forex Analytics, and we'll be discussing the charts that matter, the flows that we're seeing, and the probability of direction that we're seeing in financial markets and the news that's really looking to be driving and being a catalyst for some of those price action going forward. So, Mr. Blake Morrow, come into the programme. Starting to ramp up our election coverage. I know a lot of people just can't wait to get it over and done with, to be honest. Obviously, you do. I'm sure you do as well. But I think, we talked about it a little bit last week, but I think shit gets real from here, right? As we start focusing more on trades and how our market condition can evolve around that situation.
Yeah, it does. And I think actually some trades are starting to rear their head already.
Yeah. So
it's going to be good just to talk about it. We got 19 days. So that means we have at least 3 more shows to talk all about the elections. And depending on if it's contested or not, which it's probably going to be, we might actually be able to talk about it for the next 14 shows.
Well, I think the interesting thing is and we'll talk about some trades about it in the next section, but I think one of the interesting things is that, obviously we are guided by polls and, betting markets. There does seem to be a sort of a healthy skepticism around the betting markets, which we know Trump has done well. People are saying that, the one individual has lumped on about $25 million in poly market on Trump, and that's pushed the odds up, and we're not sure who that one individual is, but I think people are saying that there's some hijinks at play there, and we'll have to see. But again, these are the things that do guide us, I guess, in terms of our risk. So we can be cynical around the polls and the betting markets, but I guess it's what we have, right?
That's what we have, and there's some sentiment that comes around that as well. And I think that the markets are going to be moving off of the polls, the betting markets, and I was even looking at them this morning. So we're all paying very close attention to what's happening.
I'm guided by the volatility markets. I think that's a really good way of looking at it, and I think probably let's go and have a look at the trades and how this is shaping up. Let's go to Topical Thunder. Don't shoot me. I'm going to talk about the election. Here we go. Right, betting markets. For what they're worth. I know people out there are going to say, but Chris, they're manipulated. Okay, fine. Yes, maybe. But look, certainly Trump now is if you look at Betfair, which is pretty liquid, they've got Trump's now ahead in terms of the implied probability of taking the White House by 17 percentage points, which is as big as it's been. The average of if you take all the real clear politics average of the polls in the 7 swing states, which is really all you need to look at, Trump is now ahead in every state bar Wisconsin. A lot of those, I will say, are within the margin of error. So it still looks pretty close when we're looking at the polling of the average of all the polls in those swing states. But he is ahead. And again, that's part of the reason why the betting markets are where they are. I think what's really important for me as well, Blake, is that if you look at poly market, again, caveats according, there is a 42% implied chance now that the Republicans get a clean sweep, which is as high as it's been. So obviously that affects our trades. Without going into the betting markets, what trades are you specifically looking at now? I mean, I'm looking at the volatility markets. Dollar MEX implied 1 month implied vols, 100 percentile. Dollar CNH implied vols, 1 month implied vols have pushed up. So people are betting on movement and seeing the dollar as the play here. So trade tariffs for me are the obvious ones to look at.
Yeah, and considering that was the big story over the last 24 hours is the interview that Trump did on the 10% tariffs across the board, and that when you talk about first of all, I'm gonna give you a betting market that I look at Predict It. So that's one of those that that I tend to pay attention to, and Trump's ahead by of Harris by about 7 or 8%, and seems pretty realistic based on everything else that we see. But some of the things that we're starting to see in our markets is a reflection, in my opinion, of the election that's to come. And it's not necessarily in equities, because, and we're going to talk about that in the next segment. I don't want to jump over there just yet, about what the equity markets may or may not do at current levels. But if you look beyond the equity markets, you look at the Mexican peso. The Mexican peso looks like it's playing a little catch up to a Trump lead. You've got the peso that is weak. You've got Bitcoin and other cryptos that are starting to firm up. Trump is obviously a pro crypto trade. So when you have markets that look like that, you can go past the betting markets and just realize that our markets are really starting to pay attention to what's going on. Like I said, I think we're going to talk a little bit about equity in just a few seconds. But Chris, what else are you seeing that's moving?
Well, I think it's, for me, trade tariffs are the thing. If Trump was to win, but doesn't get a split Congress, then trade tariffs are the only thing people are going to be really talking about. And obviously, raising the tariff levels in China by to 60%, that's a big percentage point increase from where they were before. If you go back to 2018, where tariffs were originally put up by 10%, and then in 2029 up to 25%, the Chinese essentially depreciated their currency by 11% to offset that tax. You've got to think that when they're raising it by 35 percentage points in this run, is massive. It's a huge deal. So you've got to think that the Chinese are going to look to depreciate their currency over a number of months. And realistically, you've got to be thinking that dollar CNH would move sharply higher on that. Dollar MEX would be moving sharply higher if we were to see that. And go back to 2018, 2019, it was actually dollar SAFA and dollar Brazil that had big moves. I think dollar SAFA rallied about 35% over a 5-month period once those trade tariffs have in. So how much has been priced in? I don't think a lot. Dollar CNH has only moved up 2.5% in the recent run. So I feel that's the big one. Obviously, if we were to see a red wave, then, Jesus is on. The dollar's going to absolutely fly, by the Russell. The Russell, whether you offset that against another trade and do a pairs trade, but, deregulation kicks in, potentially tax cuts, buy America, buy the small caps, buy inward-facing companies, Russell outperforms. That would be the trade. Also short, the renewable energy ETF, I think, would be a good one. So there's some really good trades there, but it really depends whether we get a Trump win, a split Congress, or obviously a Harris. And if we get a Harris win, then a lot of the trades that have been put on recently will be unwound. So you could see a bit of movement there. But let's go into the equity trade and focus on that one, I reckon.
Yeah, let's talk about it. Last week, if you were listening here in the trade-off, we talked about, well, actually, it was one of my setups about the S&P hitting a confluence of resistance, divergent relative strength. And we've seen over the last couple of days, we're consolidating, not too far off of the all-time highs. We're just, less than whatever it is, 1.5%, or 0.5% off the highs. But my question is to you here in a second. Well, I want to ask you this question, but I want to add a little bit of color to it. Are the equity markets frothy here? And if you think about where equity markets are at, and what could happen following this election. I know there's a lot of people that are like, look, I want to be long equities because I feel Trump's going to win. And, the natural trade is just going to be long stocks, long dollar, long crypto. There's a whole multitude of trades, but it's not just the election that we're dealing with. We're also dealing with the Middle East tensions that seem, we could just say it's, tit for tat, eye for an eye. Nothing big. It hasn't really escalated as of right now, but it still is a big risk in the markets. But as far as equities go, how do you feel where we're currently at? I feel a little frothy, and as we're going to talk about here in a few minutes, we're coming into earnings season, a really important earnings season. So how are you feeling about equities where they currently sit? And let's just talk S&P broad markets in general, Chris.
I mean, it's been tough to short because every pullback's been so shallow. I mean,
sure.
Like if you're a valuation person, which I'm not, but if you were, then the market's trading at 21 times forward, which is pretty punchy. And the equity risk premium is very, very low. So there's not a lot of cushion if we were to see something, negative happen, that you could easily see an unwind. Market's obviously very long of equities at the moment, so you've got that working against it. But could we see new highs? Absolutely, we could. I mean, next week we've got 37% of the S&P market cap due to report, which we'll talk about in a second. Earnings revisions have come lower, so that's generally going to be weighing on the fourth quarter expectations. But yeah, everything still seems to be in place. The US is still growing at 3%. The Fed puts in place. The US is looking relatively attractive. Earnings by the end of next year expected to be up 18%. So all of these factors are positive. But yeah, we saw signs earlier in the week of Nvidia showing real leadership and tech really coming along, and obviously that was unwound a little bit by the news what we saw from ASML. But yeah, I wouldn't be surprised if we saw an all-time highs coming again, the 47th of the year, I think, but we've seen 46 so far. So, the market is there. But obviously, if we were to see some election jitters, people de-risking into that, I think that would set us up for, what I would love to see, Blake, and I'm talking hypotheticals here, I would like to see about a 7 to 10% decline, and then a nice rally into year end. That would be, as people look to chase that performance, that would be what I'd see. Whether we get that's another factor. So I don't like the risk reward at these levels is what I'm saying. But I think I wouldn't be surprised we saw.
Me neither. And one of the things I want to mention before we move on to the next topic is Kamala Harris is being interviewed. I believe it's tonight. I have to double check my notes. Somebody can jump in the comments. I believe it's tonight. She's being interviewed on Fox News. Depending on how she does there, it could swing the polls just a little bit. That might even be enough if she has a decent showing and she holds her own, if you will. Could swing the polls a little bit. Could elicit some selling, maybe a little bit of selling. I think if you're long equities and you think they're frothy, which I do, and I'm not short equities right now. But what I would be doing if I was long, I'd be definitely watching. There's a couple key levels just below the market where I think you have to just make sure that they don't get compromised and know where your risk is and keep it tight. Right.
Keep it tight. Right. Let's go to the dollar because the dollar has been it's been on a solid run. I mean, you could argue that there's probably some Trump trades going into that as the polls sort of move in his favour, and you're starting to see that in the betting markets. You could say but obviously you've got the rate differentials working nicely, and I think that's been the big story. You can certainly see a clear overlap between relative rate expectations over 1 year rates have certainly been driving that. Obviously relative growth rates have been working there. So it's trying to work out how much of this is a Trump trade, how much of this is rates. I think I'll pick out sort of 5% at the moment is probably a Trump trade. The rest is relative growth, relative rate settings more than anything else. But yeah, look, the dollar's on fire at the moment, and dollar yen's testing key levels, which we'll talk about in a second. Euro dollar's broken down into 108.50. Aussie dollar wants to break down. It's all looking pretty. Dollar Swiss is a trade that's been working nicely, so it looks pretty good for the dollar at the moment. I don't think we're overbought and overloved at the moment, but it's certainly looking like it could do. What do you think?
Well, we've had a hell of a correction, and I know we talked a lot about this last week. Just 3 weeks ago, everybody was talking about the death of the dollar, and we've seen this remarkable turnaround. We're probably, I would say, mid-range of a big, very long-term range, but we got here really quick. Tomorrow's going to be a really big day for the dollar, and it's not necessarily dollar related, but it's ECB related. As Ryan and Michael Brown, I think they talked about it on the Trade Off UK show. They went extensively into it, so I don't need to go into it too much. But it depends how undovish or dove hawkerish. I don't know. It depends on the ECB if they set the pace. If they give us the idea that it's going to be 25%. Or 25 basis point cut from here on out, for the foreseeable future, or if they're just a little bit more hawkish. I can't see them being a little bit more hawkish, but maybe less undovish. Anyway,
where's the risk? Where's the risk in the ECB meeting? Let me ask you, where's the risk in the euro? Is it to the higher, which I think it is, and I'm not going to skew judgment. Where do you think the balance of risk for the euro dollar lies in the next sort of 24, 48 hours?
I do think it's higher. I actually do think it's higher. Technically, and we're going to be looking at the chart. So make sure you all stick around for that. We do. I think the euro, the risk is higher, but I've been hoping for higher all week, Chris. even last week, I was hoping we'd get a rally to 110 so I could sell into it.
Yeah.
Or we could sell into it. And that just hasn't been the case either. So
I'm going to talk about euro dollar in a second, but yeah, I think we've got. I think the situation, they're going to cut rates. It's all priced in. Can they outdove a dovish market? Is what I'm thinking, right? And I don't know if they will, and therefore you may see a little bit of a reprieve. I think you sell rallies in euro. I think that's where the risk is at the moment. I think you get a bit of a short squeeze because they're not going to outdove a dovish market. They will be dovish, but not dovish enough. And I think you get a little bit of a squeeze up in euro dollar, which probably offers you a chance to sell into, in my opinion. So that's where we go.
So they're going to be undovishness. Got it. Chris, thank you very much.
There's a word for it. I'm just not quite sure what it is. So.
All right, let's jump into our last segment, which is earnings. We've already seen some earnings from some bank earnings over the last couple of days, but we're heading into earnings season once again. Every quarter, it seems like we do this runaround, but we have some really important companies reporting over the course of the next week. And so if you look ahead into next week, I just want to talk about a few of the companies that we have. So on October 22nd, so skip to like Tuesday the 22nd, we have Google, we have GE, and we have Texas Instruments. A couple of big names. Obviously, when you're talking about FANG, you're talking about Texas Instruments being a big semiconductor stock and AI.
And they make calculators.
Yeah, and big calculators too, which my kids actually still buy those damn things.
Really, you haven't got them onto.
They spend $200 a pop, and
you haven't got them into Excel and AI yet.
No, they have to use the damn calculators, and they keep losing them, and we keep buying them. So of course we can help keep that stock afloat personally. Okay. You look the next day into Wednesday, October 23rd, we have Tesla, which they just came off their big event with the robo-taxi and their humanoid robots. So Tesla earnings on Wednesday, we have IBM. And then October 24th, which is Thursday, we have the big US and global retailer, I should not say US, Amazon. And then we have Caterpillar, and we have other companies too. There's a plethora of earnings that are coming. Those are just some of the ones that come to mind as we're going into this next week. So some big important ones that we need to be paying attention to. But Chris, turning it to you, as we come into this earnings season, how do you feel about U.S. earnings? Because as you just pointed out, analysts are still looking for growth to be quite robust.
You've got to love the banks. Go and have a look at the XLF. It's absolutely ripping. Morgan Stanley's earnings were quality. Stocks absolutely going for it. JP Morgan, loved what I heard from Jamie Dimon in the call. Great earnings. The stock's loving it as well. I mean, it's not all rosy. I mean, Charles Schwab as well. I mean, big numbers there. So the banks are finding the love at the moment. It's a big consensus trade. Everyone's trying to buy pullbacks in the banks. The banks look good. We want to see the semis and NVIDIA really working. NVIDIA don't report until November, but we want to see some leadership through there, and it can rip it. But right now it's just all banks. Just buy the banks. We'll have to see what happens with retailers when they come out later. Probably November wise. But at the moment, the earnings so far have been there's been some big movers. I mean, I think the average expected stock move on the day. Implied by options is around 5.1% for the. So you are getting some life, and this is why traders do like the earnings side of factors. Tesla next week, a big one though. Obviously, we got very disappointed by what we heard from robo-taxi, but the stock is implying about a 7% move on the day of earnings there. So obviously a big trader favourite, and the market's expecting a bit of movement coming through that one there as well. So lots to play for. I'm not necessarily sure I'm going to be looking at some of the names you looked at there. GE, pretty boring for me, to be honest. But obviously you understand why they're important. Caterpillar, given what we heard from ASML, obviously a very different business. But ASML talking about orders from China dissipating. The market got that one wholly wrong. But anything with China exposure and talking about anecdotal demand, I think will be really interesting. We know that China makes a source a decent amount of their revenue from China. So I think listening to what they have to say would be quite important as well from a macro perspective. So good one to watch. And I think earnings are offering some big moves as we expected pre-earnings season. Anyway, let's go to next season. The next subject, it's a setup. All right, we just talked about it in some detail, but let's bring up the technicals. Let's have a look at this pictorially. Let's have a look at euro dollar, please. As you can see there, double top. The neckline, we talked about this actually a while back, and it seems to be playing out quite nicely, but we've got the double top target around 108. Whether it gets there, obviously, is another factor, but we just moved through the year-to-date average of 108.64. That typically can be, given that currencies can be quite mean reverting, and probably one of the most mean reverting asset classes out there, if you call it an asset class, then we've just gone through that, the sort of the average level for the year. I still think that rallies to be sold. We just talked about there, because look at this trend that we've got. Every rally is capped into these short-term moving averages. It's offering a chance to sell into. So that is really well defined, and that tells me right now, from a big picture perspective, that I'm either neutral or I'm short. But right now, it just seems like a low probability, unless you're working on much lower timeframes, to be looking to counter this move right now, because the flow of capital is still firmly to be short euros. If you go to one year rates, there's a 147 basis point premium advantage for the US, and that's growing at the moment. So it's really been a rate story and a growth story, and maybe a little bit of a Trump story that comes into it. But right now, this is in free fall at the moment, and betting against it, whilst I think the ECB, obviously, there are risks to the upside, and maybe that offers a trade for people who are looking at intraday. I still think that a rally in euro dollar on the back of, given what we're seeing in this trend, is for me would be a chance to sell into, and I want to take that chance because I think this goes lower. If we were to see, I know 19 days is an eternity in financial markets, certainly in FX markets, but if we were to see, Trump win, then euro dollar goes lower. Certainly if we were to see a red wave, then, you could be talking, I don't know, picking numbers out hypothetically, but you could certainly see that market trade, far south of 105. Over to you, Blake.
Yeah, I don't disagree with you, Chris. It's a great setup, and as I think one of the things that you don't have it on your chart, but we closed just below the 200 DMA today as well. Just it's worth noting, especially if tomorrow we get a ECB bounce and we close back above it. Might give some people a little bit of legs for a bounce, but man, what a great trend. And it's beautiful. Been a strong one. So taking it over to the US dollar Mexican peso, this is one of those Trump trades that I think the market's starting to sniff out, Chris. You could have talked about the euro and the dollar, and I think some of the dollar strength that is on the back of this conversation that Trump has had about tariffs over the last 24 hours. But you really see it in the dollar Mexican peso. So technically, we're at the $20 level, or very, very darn close. I think it's triangle resistance, long-term 38% retracement, and some people are going to just, make a run for it, and a move above 20, probably 20.15. It's going to take on 21, which is actually the 50% retracement. It's not shown in this chart. But if we continue to consolidate ahead of the elections, I would be looking to buy dips on a dip below 1950 for an eventual move above 20. But this is a setup. I'm not long dollar mex right now, ironically, but it is something I'm looking to trade in the days ahead and the weeks ahead.
Yeah, I think this is a big one. As I say, look at the 1 month implied volatility in dollar mex, and it's been moving up. There's been a lot of demand for vol, and people are expecting movement. So I think that's a sign of hedging the election. So people are looking at this one very closely. Another one, which of course is a bit of an election proxy, given what Trump's been saying about making America the powerhouse of Bitcoin mining and other factors as well. Obviously, you've got the potentially, if he was to win, which is, as I say, is going to be very close, but certainly if he was to win, when you've got the potential president of the United States championing your corner, it's a nice person to have, and you're fighting that cause. But look at the technicals now. We've got the multi-month channel resistance that we're fighting at the moment. We've just taken out the recent high, so we've made a higher high. We've been making a series of intraday higher highs playing through. I like the setup here. A break of this channel, I think, is going to get a bit of notice. And obviously, there's really not a huge amount of markets out there, instruments, asset classes, which work better from a momentum and a sort of a FOMO perspective, people chasing, than what we see in crypto. What I also like, if you have a look at the Bitcoin ETF inflows that we've been seeing last few days, there's been some massive volume. I think on Monday we saw the second highest amount of inflows into the Bitcoin ETF series that we've seen since the inception. So I think that tells you what you need to know about this. But certainly crypto at the moment is finding a bit of love. It's starting to trend, and I think a break of this channel would be quite significant, and see people looking to chase this one into above 70,000 and onwards. So looking pretty good at the moment. If I was a crypto bull, I'm never bullish or bearish, to show what I see. I'd be feeling pretty good going into the election at this stage. Blake.
Well, if you want to talk about crypto, we might as well just talk about Ethereum as well. And just so everybody knows, Westy and I, we do communicate a little bit ahead of time, but I didn't know he was going to be talking about Bitcoin today. He didn't know I was going to be talking about Ethereum. But I wanted to ask, what's the holdup here? I mean, maybe it's this triangle pattern. We're right up against the 38% retracement, which is 26.45, 26.50 if you run a roundup. But I believe if we do finally break, like if Bitcoin starts to claw back and take over 70,000, which could be literally in the next 24 hours, I think Ethereum might open the door for a move back towards 2,800, that previous support from back in March. What do you think about Ethereum here? Because Bitcoin has been, it's kind of like it's been moving higher, Chris, and it's a big cup and handle. Looks bullish, as you pointed out. Is Ethereum, do you think it could catch up?
I haven't been following the fundamentals of late so much, but yeah, we both can see the same thing on the chart, and that the market is sort of, after a decent move down and working within that primary trend, there's a consolidation, and the buyers try to push it up and they're not really having the emphasis to do that, and then the sellers are not really winning, so you're getting that consolidation, hence the triangle pattern. So that needs to rectify itself, and I think you'd be guided by the price action more than anything else, right? You get the market to compel you into trade, an upside break. That sort of frames your bias. You look for long positions. I think that'd be quite powerful. Downside, if it was to roll over and break that rising trend, then I think that would sort of see a continuation of that trend that we saw between June and July. So I think you just, right now, the market, there's a battle going on in Ethereum that perhaps is that's not taking place in Bitcoin. It feels like the buyers are in control of the Bitcoin move, whereas there's this sort of this battle going on. I think with Ethereum, you just wait for the market to reveal itself, and then that would present itself with a trade. That's the way I'll be looking at it. Do you disagree on that thesis?
No, I don't, and I don't follow the backdrop either. And I have to just assume that one crypto goes up, Bitcoin leads the way. A lot of these other secondary crypto markets are going to follow suit. So you just let it reveal itself with Bitcoin above 70,000, and I think you got a green light. So
yeah, right. Good stuff. All right, let's go into play today. Well, I'm going dollar yen, and I can see you're going dollar CAD, so it's going to be an old dollar affair. We've been quite fairly heavy on the dollars today. I was probably going to go on the Kiwi side of things. Interesting now that there's talk of a 75 basis point cut at the next meeting from the RBNZ, which is emergency sort of rate policy moves. Remittance that the central bank's well behind the curve. But, today I've got dollar yen, and, I'm not buying it now, but I want to wait for a break of the upside of just below 150. You can see the black horizontal line there. And I want to buy strength because, if we were to see something in the next 24 hours, or poor retail sales number in the US, or the ECB invokes something that's slightly more hawkish, which causes euro dollar to rally and dollar pairs to sell off based on that, then I'm not filled, and you get a close below that 5-day exponential moving average, and that sort of mitigates this momentum that we've been seeing. But I think a break of that upside, I think I'd be chasing that for 152. So I'm waiting for yields to push a little bit higher. And, we get that fill. I think longer term, though, as I say, let's talk about the election trades, because whilst dollar yen might not necessarily be the clearest or cleanest expression of Trump trades, if you are looking at that side of the ledger, if Trump was to get a red wave, or the GOP were to get a red wave, then the deficit spending would be significant to the point where 10-year yields and all parts of the curve would move sharply higher. And I think that's where dollar yen becomes a really clear trade. So you're going to be seeing yields moving higher because of the amount of issuance that the Treasury Department would have to do. And I think dollar yen, which is the cleanest expression of bond yields, would rise. That's not a trade for now, but it's, if we were to see that, then I think dollar yen's got a significant move up on the back of the fiscal response. But right now, wait for the break, chase it, 152, but I'm not filled right now.
All right, them's fighting words, Chris. Remember, I'm actually on the other side of this trade from last week. Still. So, all right. Well, I'm going to actually talk about the US dollar Canadian because it's a little loony, and I'm going to get a little loony with it. The dollar CAD, it started off with last Friday. Last Friday's, Canadian jobs report was strong. Dollar CAD actually pushed lower. And then it just turned around and took off, and the Canadian got sold, and we closed at our highs. Then yesterday, Canadian inflation data was weak. The dollar CAD spiked, hit a top, hit the 78% retracement, and has been trading heavy ever since. Now, I'm actually, and as I mentioned this several times on the trade-off shows, and actually even on my shows that we do with our community, I believe that the dollar CAD's eventually going to 140. I think that right now, the way that it's trading, it trades a little bit lower towards 136.50. 136.60, somewhere down there is where I'm going to be looking to reestablish longs in the dollar CAD. I actually played it on the short side earlier today after the inflation data was released, or actually it was yesterday. I got out a little too early, but it's still been coming down, bucking the trend. The Canadian dollar has been really strong the last 24 hours. I think that might persist for another 24 to 48 hours, but I'm going to be looking to fade that Canadian strength. In other words, be looking to go long dollar CAD on any significant dip to 136.50. So there's my play of the day.
Interesting one with the Bank of Canada, the next central bank meeting there. We've got just over 30 odd basis points. So there is an argument being had that the BOC could be looking to cut by 50 basis points to the next one. So it's an interesting round. We go into October, into the November central bank meetings. It's going to be some interesting cuts. The ECB, obviously 25, Bank of England 25. There's a little bit more. There's a small chance that they could go 50. Probably won't, but certainly the market's opening a door to a 50. The RBNZ could be opening for 75. Bank of Canada 50. Obviously the RBA still sitting on their hands for now, but then obviously we've seen some big easing from the Chinese. So it's an interesting one. I think we're in for a pretty lively central bank, late October, November series. I think there could be some. Whilst a lot's already been discounted, it could be quite interesting, especially past the election as well. Anyway, thank you everyone for joining us. Thank you for sticking around. Thanks, Blake, for some of your great ideas and analysis. Hit the like button if you find yourself liking the show. Obviously, subscribe, tell your family and friends, and we'll see you back next week for more of the trade-off.